In this video, we'll walk through adjusting EBITDA to account for one-off transactions during the reporting periods. This adjustment helps us exclude these one-offs from future forecasts, ensuring a clearer picture of ongoing performance. Under the operating model, starting below net income in row 68, you'll find the definitional EBITDA, followed by two groups for EBITDA adjustments: Management-Adjusted EBITDA and Diligence-Adjusted EBITDA. As an example for the Management-Adjusted EBITDA, the seller provided these one-off transactions incurred. We simply copy and paste the figures provided in the respective input cells. Below this, you'll see the Management-Adjusted EBITDA for each last 12 months period, reflecting adjustments for these one-off transactions. To the right, the pro forma adjustments column shows the total adjustments for the two most recent fiscal years. Now, let's turn to the Diligence-Adjusted EBITDA. During the due diligence process, we may find that certain entries in the Management-Adjusted EBITDA do not align with our assessment. For example, if diligence disagrees with the share grant and option expenses amount provided in the management adjustment, we'll input this revised amount in the corresponding diligence adjustment cells. If diligence agrees with the management adjustments, we'll input a 0 in the respective cells to indicate no change is required. Below the input area, you'll find the last 12 months Diligence-Adjusted EBITDA for each period. This adjusted EBITDA is ultimately what we use for valuation and in the Transaction Assumptions tab. Next, let's proceed with the pro forma adjustments. This step removes the EBITDA adjustment items from the income statement, giving a clearer view of the company's financials under more normalized conditions, and make the forecast more accurate. Start by setting the management adjustment and diligence adjustment to 0 by entering a negative amount equal to the EBITDA adjustments. Next, locate the corresponding account in the income statement section to offset the amount, ensuring the adjustments in both the net income and EBITDA sections net to 0. For accounts adjusted twice, in like share grant and option expense, we sum the amounts under both management and diligence-adjusted EBITDA. As an example, this applies to share grant and option expenses. For reference, here are the total amount for share grant and option expenses under the EBITDA adjustment section. After completing these adjustments, you'll see the pro forma net income and diligence-adjusted EBITDA under columns CO and Court for the two fiscal years. In addition, we suggest that the pro forma EBITDA matches the diligence-adjusted EBITDA in column. A quick note: there's an adjustment check above. Any imbalance in the adjustment amounts will be calculated and displayed in red, helping you ensure all adjustments are accurate. That concludes this guide. Thank you, and we'll see you in the next video.